Hi, this is John Seville from Acorn Wealth, and this is your executive summary for the 4th of September. Okay, so we've coming into a very interesting period for the S&P 500. We had open range on Tuesday, where we set a high of 2006.12 and a low of 1994.85. The trick is now watching whether we breach below or above that to set the likely action for the rest of the month of September up until options expiration Friday. Now, the interesting thing that's occurred is we've continued to bump along this resistance line set by the two right shoulders of that previous head and shoulder pattern. So we've just continued to bump right into that and made those kind of slightly higher highs, but coinciding with that, also making lower lows on the index. And what that's been accompanied with has been a sell-off in the money flow. You can see that as the market's going higher, we see that money flow going lower and lower and lower. That's based on an 8 period. And here's the more larger time frame, the 21 period. You can see there's certainly a key divergence there, which is what's making me the most cautious about the strength of the market. Now, the other thing is that we're also closing low in the range. So I think it's there's a good potential. I mean, this could go higher, but I think there's certainly a bias to the downside given the price action of these last couple of days. Obviously, the next couple of days will tell, but caution should be in the air. If we do have a pullback, I think we'll get a pullback at least down to this kind of area here at the 1967-1970 mark. Now, playing into that, I wanted to find a search for stocks kind of that were playing into that had weakness in a double top formation, and this is the ones that really stood out to me was TMO, or Thermo Fisher Scientific. It's obviously going into a double top pattern. You can see it's reaching resistance right now and possibly could get a little bit higher intraday, but strong resistance coming in at 126.55 and down into 125.22 where we bumped into today. And the money flow has been pretty stagnant despite the strength in the stock. The stock went higher, and the money flow, in fact, has been going lower. Now, not surprising that we see the smart money selling off when we actually go over and look at the insiders, and we can see heavy selling in just these last 2 weeks, from the 27th of August through to the 2nd of September. You can see large chunks of selling of 5.7 million, 2.5 million, 1.5 million, 1.27 million. So last time we saw this kind of heavy selling was back in February and March this year, which if we go back and have a look at the chart, you can see that was in fact right around where we peaked out before pulling back the last time. So this is kind of one of those situations where you got a special ingredient being the insiders selling off, as well as a technically bearish pattern, and the RSI and things like that are all quite overbought. So a pullback could be an interesting play on this down towards the 120 to 119 area, and so there's a $5 drop there, or $6 drop if it gets a little bit higher into the resistance, and obviously wanting to see that resistance hold. So considering stop criteria above that area. But that could also be a potential options play, looking at kind of 120 or 122 puts, and there's a way to potentially leverage that move. So that is your executive summary for today. We'll see you all in the next video.